Hey guys, how you doing? Peter here with Forte Trader. Today I want to talk to you about a few things. I'm going to start a free monthly calendar spread video. Okay, I'm going to start sharing free ideas every month, once a month. Hell, I might even do it once a week if I see fit to just share that with the crowd. There's plenty of opportunities in futures and calendar commodity spreads. Uh, Almost every week you'll find a spread of them, an influx of them all over the markets from agriculture, grains, energy, and etc. Today I'm going to talk a little bit about energy because it's much more popular to future outright traders, and I know that a lot of people are going to come into this video and not be too familiar with calendar spreads. You may have found it due to a search on calendar spread, then you're familiar with it, but most of you are not. And so just want to share a little crude oil calendar spread opportunity that I see coming up here. This is about October 4th, the week of this. Starting from this day on, you can look forward for this opportunity. I'm going to use, secondly, an outright outlook and then express a quick seasonal outlook and combine them together, and why I would also be very cautious on making my own discretionary play. And it will make sense because the fact that on technical levels we use levels, and on seasonals we use historical patterns. So, we try to use a statistical edge when we make our trades on calendars, and we use also calendars for numerous reasons. Again, those of you that are new to calendar itself, we'll have future webinar and boot camps explaining exactly what those are. But I wanted to share with you a typical crude oil calendar spread that I'd like to do, and I want to start off with looking at just the front month of November 1st. Crude oil calendar spread this year has had a lot of news, a lot of headlines, just like I think it never stopped having headlines. It's just the more you get engaged in it, you start feeling like it just gets more, either if it's in an uptrend, it has a ton of headline, if downtrend has a ton of headline, it's sideways action, oh, there's a ton of headline here, there's a ton of oil cartels running, geopolitical stuff running, all this. So it's just, but the newest thing has been that we've also been, on an uptrend all year long since last year and the year before, from the lowest of almost 20 something dollars a barrel. I want to emphasize on where oil is sitting right now. October 4th business day close, we're sitting right at new highs. Okay, we're at about 74.63 as the close here on my TOS platform, as you see. We're up 30 cents in the after hours, but then this whole day today, we made almost a $2 move down. Okay, we closed, we're holding a support area. We've broken out resistance became support. We have in this upper area here almost $80 in this, hopefully soon in the future, an area where we could have a new resistance from a prior high. Okay, and these are very key areas where big money institutes and or producers are. Okay, and producers are a very important position to recognize when we're trading agriculture and energy and any commodity future market, because they're usually playing on the other end. They're hedging. We're doing calendar spreads. We're hedging our outright trade so we can make affordable, easy trades with less volatility and higher chances where you can sleep at night kind of a trade. So initially, when I'm going to trade a calendar spread, I still want to look at our front month, which is November. Okay, and crude obviously expires monthly versus most other futures and stuff that they're quarterly and such, but energies, they're monthly. And again, I'm going to try to cut myself from keeping those details long. Here we're going to just get to the point. As I see, my outlook is hitting a resistance, becoming a new support here. I see, personally, it's just my opinion. It doesn't matter who, everyone has their own opinion. My opinion is that we could make new highs before we start tapering off into lows throughout the rest of the winter season, as oil starts getting converted by producers into heating oil and into other natural gas elements, energy products being used for folks that need for cold season, okay, and less driving, etc. On seasonality level, I took a snapshot of a platform that we use here, and this will be available in our future boot camps. Seasonal tendencies are very, very historically likely to follow the same direction. Here I have a 15-year historical pattern, each color representing, as you see in the top left corner, 5-year, 10-year, 15-year pattern, the black being our current year spread. I'm spreading, as you see, CLF 19 over H19, which is January over March. And our historical seasonal tendency tells us that we're almost in a perfect correlation to that. However, be very careful, because every little line here, remember, every tick in crude oil, for those of you that know, for those of you it's okay not to know this, it's $10 a tick. So every dollar move in crude oil futures is $1,000. Be mindful that this little line, if crude oil pops on us, which crude is very volatile, especially the headlines and other geopolitical stuff, especially this year, being 2018, this little pop can have you can have a drawdown before you have any gains. So looking at this on a wider scope of things, standing back, we see a clear out downtrend of a spread, but we want to be careful on where we place our entries because of the possible pullback we can have here in a price, which what I see in oil that I'm going to share with you will startle you. It could have a way greater pullback this year because of volatility, even more than what you see on historical patterns. So the reason why it would make sense for it is this. This is just what I see. One, we've spoken about the outright patterns and where high volume areas are, okay? Support resistance areas over the bigger macro time frames. I'm using weeklies, monthlies, and scaling down on the weekly into dailies to make my overall decision. Very rarely will I come in and look at anything under that. I'm not day trading these things. I'm involved in the markets daily with these. I'm watching it daily. I'm almost watching it a lot more than I should. But my entries and exits are not day trader levels. We use the word day trader. We got used to that over the years. A lot of us do out there, but really this is a swing trade, long midterm kind of a swing trade. Strategies, in fact, most of us that even use that still say we're day trading. It's just some word we get stuck with: day trading, day trading, day trading. You swing trading and you call it day trading. It's okay. So if I use that word again and you want to correct me, that's fine. Correct me in your head, because I'm going to tell you this anyway. If I use the word day trading, I could mean swing trading. We all those of us that have graduated to higher levels of trading, we already understand what we mean. So please refrain from trying to correct me, because it doesn't get you anywhere, doesn't get me anywhere, wasting time. So what I want to do, what I think is we can have high chances of oil hitting up to these levels before we see a pull, a lower trending down into the winter. If that's possible, if I want to look at historical time on the outrights itself, it doesn't mean that every year by itself, within itself, that markets every year during the winter, fuel went down. Depends on what supply demand is. End of the day, with crude oil, supply usually is in more of a upfront state than a contango state. You know, we're usually in a backwardation kind of a mode. We're constantly in a demand for crude, because if we're using it for a different kind of energy source, such as heating oil, etc. Now, back to the seasonal charts. The reason why I would see another good reason why now we found a support around the mid 70s up to the 80, another $5 move, is even on our spread itself, we see prices right around the beginning of October pulling up a little. What could this do to our outright? It could even pull past that, because every time I see that prices coming down on 5, 10, 15-year historical time frames, we see our upfront year, our current year spread that we're looking at basically move up and past that. Same thing here. We're on a downtrend. Price moves up past that really volatile move here. I even had a losing trade here myself, a live trade here, where it hit me pretty hard. I didn't see this one coming. Some headline hit. There was things going on with different country. I try to ignore it, but I'm usually out there searching for answers. Apparently that's what it was. It moved against me very hard, very fast. But we see that. So again, if we're in a position here right under these other historical time frame, I might consider that even on top of this regular historical pullback right before the rest of the year, where we have a downtrend on the spread, we may see another big volatile move up. It translates possibly to this move that we see on the upfront November key area of resistance. Possible resistance. That's more than likely when we hit these big areas of resistance in support. They either break through and become new support, or vice versa. They turn around real quick. Commodities tend to do that, just like Forex. They do respect their levels, and you can in and out of these things put on calendar trades just on an outright perspective. So what I'd like to do is this month's suggestion, and this video is longer than normal. Future ones on our free monthly videos on suggestions will be shorter for possible calendar spreads, folks. I like to say that we'd pull in and do a January rather than really being on a seasonal sell. We get a little bit smart. Oops, I'm sorry, this is not the right. Here's Crude. We get in for a temporary position here to pull profits on the long side. I'd say we go long January and short March, which is basically going to be long CL. F is for January 19 minus CL H for March 19. You put this together in your chart. There's no reason any of your platform providers shouldn't be able to provide this to you. I like to use a company called DT Pro. They're out in Chicago. I don't know if I had the right to say their name, but you know what? I like using them. They understand span margin, and span can really reduce the amount it costs for you to get in any of these calendar spread trades, because the exchanges understand that most of these spreads, this is a intermarket spread, and they understand that intermarket spreads volatility is decreased big time versus the outright. So their overnight margins are very, very affordable. This allows most people to be able to trade futures markets, be engaged with the markets, and make a profit potentially off the markets, and without being kicked out of the opportunity of trading outrights. Outrights are a very tough thing to do, especially in crude oil, folks. I've tried it time and time again. I've been all around the block in different trading worlds. Calendar spread is my forte. I love it. In fact, in the future here, we have coming up a new revised boot camp. Okay? Those of you that know me, Forte Trader, it is a school we had built years ago with a different team to trade equities, Forex, etc. It was going to be a big thing. Since then, people moved on, and I still retain the school. It's mine. I love trading. I trade real money. I used to trade sim for a very long time. I trade my own money now. I lose my own money. I trade my own money. And the only thing I really love is spread trading. Please do not come to this site and sign up. I am not ready on this boot camp, but it's very affordable. I'm making it very affordable because I have a passion for the markets. I need to make a little something to keep the overhead for the business to run, but I'm going to show you guys how we make profits in the commodity and future markets just doing calendar spreads. It's easy. This is like beating your grandma at chess time and time again on purpose and just ruthlessly not even giving her a chance. This is like walking in a hospital and stealing a wheelchair from somebody in a hospital bed. Like, this is just ruthlessly that damn easy. Now, it might not be easy for everybody. It's technical. The words sound advanced. But calendar spreads, once you understand futures, are super, super easy. All I'd recommend you do in the meantime, if you haven't done so already, I know some of you have, is come to our homepage. And just if you want me to stay in touch with you and let you know when the boot camp is ready, I'll be more than happy to let you know. Just sign up here below with your information. I'll put you on a list, and when we are ready for that boot camp, I'll add you. If not, that's fine. The intention of this video is not for you to sign up for anything. The intention of this video is for me to start engaging with you again, the community, the trading community, and share my ideas. This is a free idea. It's a calendar spread. Whether you are a self-directed trader and you want to try this on your own, or talk to your investment advisor, if they even know what this is. Trust me, most of the guys with Series 3s may not even know. And no insult to no one out there. It's just the damn reality of things. People don't know this stuff. It took me years to dig in. And still till today, I don't know if the people I know believe what they see. But this is a good way of trading, being engaged in the markets. I'm going to share that with you. Crude oil, long January, short March, That way we hedge our risk, take the base currency dollar out of the equation. We reduce our volatility. I say let's try to get in as soon